Donald Trump has never been business as usual, and I believe that Trump 2.0 will be no exception. The world is trying to figure out what is policy and what's negotiation coming out of the incoming administration. Our allies are trying to determine how to react, and the autocrats are better prepared for a Trump presidency this time than they were the first time around. And they have 4 years to figure out a new playbook after he left, and to counter tariffs, sanctions, and to strengthen their alliances. And they've done a good job at that. President Xi met with President Biden on the sidelines of the G20 meeting in Brazil and laid out 4 red lines that were sacrosanct for China. First is can't undermine the Communist Party's grip on power. You can't push China towards democracy, can't contain its economic rise, and you can't encourage Taiwan independence. And what she said was China is ready to work with the new U.S. administration to maintain communication, expand cooperation, and manage differences for the benefits of the two peoples. So he's saying the right things and laying out guidelines. It'll be interesting to see, but I would just say that while a lot of talk lately has been about is China ready for, is the world ready for Trump 2.0 and for the tariffs, I would say China is probably well ready for it. The question is, how far does everyone go, and can the economies sustain themselves in that mindset? So today I want to cover 3 things, really: the strength of the U.S. economy, the discussion about the $2 trillion question and taking cost out, and what the market's saying based on the concerns around the policies and the policy discussions. So let's jump right in. So Chair Powell spoke last week and basically told the market that not to expect them to be in a rush to cut rates. And that's really a reflection of the strength, how strong the economy is. But the phrase that he uses here, it gives us the ability to approach our decisions carefully. When they use the term carefully in the recent past, it's usually a sign of a policy pause or a policy shift. So I think the market is trying to react to that. We'll touch on rates in a minute, but clearly the U.S. economy is doing quite well on a relative and an absolute basis. We're growing at around 3% growth. We're doing that with unemployment at very low levels historically, even with layoff announcements coming and rising layoff announcements. We are still at a very high level of employment, particularly relative to the rest of the world. And we're doing that while inflation is continuing to trend towards the 2% level, although it backed up a little bit lately. And I think this is one of the big concerns: or do some of the policies reignite inflation or not? And there's a big question around that leads to a lot of the uncertainty that we're seeing today. But even at 2.6%, it is a very manageable level for core inflation to be at. And if we open up the permitting on energy in the U.S., you could see domestic prices continue to trend down. But the strength of the economy is always reflected in the strength of its currency. And you can see the U.S. has been in a positive uptrend for some time. We continue to see some strength in the currency, although there are questions how far our policy goes. Are we able to maintain that strength? But while we're in an up rate environment and more of a tighter financial conditions environment, or a slowly declining environment relative to other nations that are really declining their rates considerably, I think the U.S. is in a relatively strong position and continues to get stronger while others are struggling. This comes at a time that you think about China's economic struggles are significant. They're going to grow sub 5% most likely this year. And the question is, will their stimulus be enough to maintain stability? I don't expect it to be a big growth engine for China, but it's really about maintaining stability. I do think China was holding back stimulus to wait to see the impact of President Trump coming in, and would rather save the bullets for when they needed to, economic bullets, I mean, when they needed to. But the U.S. economy continues to be strong. It's a reflection of the fact that we are a safe haven, but it's also a reflection of the fact that the policies that have been put in place over the past two administrations are directing capital back to the US. And the thoughts of tariffs should direct even more capital flows back to the US. I think one of the other recognitions of the strength of the US is the comparable yields of 10-year treasuries. And the US still is at a very attractive level there. And the yield differentials suggest that if people are looking to put money to work, they'll continue to look to gain the higher yield with the better safety. And that would drive capital back to the US again. So even with the rate cuts that we've seen so far, we are still at a very much higher yielding base than most of the rest of the world. And I think that is in the developed world, and that's going to continue to attract capital here. So switching gears to Musk and can he take money out of the $2 trillion out? I wanted to just share with you what the budget looked like for last year. For this fiscal year 24, and it was outlays of 6.8 trillion. I think it's 6.75 rounded up. You had revenues of 4.9, a deficit of around 2, and debt on the rise. I think one of the challenges for Elon is going to be the nature of spending in the US. At that 6.8, about 13.1 is for debt servicing, which is probably going to rise. You have defense spending, which the Trump administration would like to increase at 12.9%. And then you have entitlements, which the president-elect has said in his campaign that he was not going to touch Social Security or Medicare. So you're really looking at 40% of the budget to take 2 trillion out, which is basically taking around 2 trillion out of 2.7 trillion, which means it's not going to be likely that they can get all that. There was no mention of the time, how soon the money would come out and all that kind of stuff. But that said, there are areas of the government that the pressures of this type of budget review will change behaviors. And I do think there's that. But even billions of dollars here or there do create offsets and create better efficiencies and get people thinking about the spending right and maybe taking a more of a corporate approach to how we manage the government while still focusing on the fact that we do have social programs that solve real needs is going to be critical for it. But I think the numbers say it's going to be very difficult for the big cuts to happen. However, I think there are other offsets that can help drive the economy forward, such as what they're talking about doing in terms of lowering energy costs, or what they're talking about doing in lowering regulatory costs, which actually can push the economy forward and offset some of the costs that they're looking to take out. But I think it's going to be a real challenge to get the kind of numbers that are being thrown about. And when you run into the legacy of Washington, D.C., will make it a much bigger challenge. So I think there'll be some positives coming out of the efficiency needs, but I don't think a $2 trillion number is realistic. But I think the shift in the mindset of being more conscious, pressing people on their contracts and taking some of the fat out of the system will help increase efficiencies as you go through and maybe make the government run a lot better. But I think the idea that they come in and just revise something that's been in place for a long time is not very likely to happen. So I think there's not going to be that big push to get money out, which does impact other parts of the Trump agenda and may make it less likely that they can achieve some of the other either spending or cost-cutting programs or budget programs that they'd like to do. But you look at the numbers, it's a challenge to get anywhere near that. But the idea of getting more efficiencies is a good one. So let's switch gears to what happened after the election and what are the markets telling us about what's going on and what do we think has to come still. So clearly, following the election, we had a pretty sharp rally from November 5th through the 13th, where you saw U.S. equities up about just under 4%. Canada did quite well. All world country index was up about 2%. But then as you look down the list, a lot of the people that are going to be at the bottom here, like Korea, China, other markets that were going to get hit by tariffs in other areas are the ones that you saw a negative impact. Now, the U.S. equity markets have been slow the last couple of days and have given back some of the returns, but most strategists are looking for a positive move into the end of the year. But more to come on where the equity markets go. But clearly, initial reaction was tariffs and other policies would be favorable to the U.S., less favorable to our people with big deficits, or big trade surpluses. What is interesting is how fast governments around the world have responded to the Trump presidential change coming, and they've already started talking about how to offset their trade deficits with us, and what are they going to do to bring them in line so they can avoid tariffs, which would have the effect of driving capital to the U.S. without having the tariffs go in, which would solve part of what Trump's trying to do, is get fairer trade. So this is where it's interesting. Is it policy or is it negotiations? Because already we're starting to see countries like Taiwan say they want to increase their defense spend. Brussels has talked about changing the fiscal rules to allow spending to increase, and maybe to look to preempt some of the tariff discussions that are coming potentially from a Trump administration. So the equity markets have responded positively overall, but the bond markets less so. And we've seen bond rates move up from a low of around 362 on the 10-year to now we're in the 437, 440 range. So the bond market's telling a different message about their view of a Trump administration, and it's one that's worrying about debt and deficits and the impact on growth potentially of the tariffs if they go too far. So that's what the bond market's saying, which puts Chair Powell in a more difficult spot. But the market has reduced their bets on rate cuts considerably. At the same time, you are seeing strategists around the street shift their views of how the equity markets are going to do. Two of the biggest bears, Mike Wilson and Nancy Lazar, both were in the reception camp. And even with big pullbacks in the equity markets, Mike Wilson today is looking at 6,100 for his target for the S&P. Goldman's at 6,500. This is for end of next year. And Ed Yardeni's at 7,000 with a view that we can see 10,000 by 2030 if we get the 15% tax cuts, get to the 15% level on corporate taxes. So you are starting to see the market think more favorably. I think one of the challenges for the markets is the view on rate cuts coming down. Right now, the market's thinking we're going to have 3 cuts between now and the end of the year. That's versus 7 that we saw back in September. So there are a lot of mixed messages coming from the markets these days on where we think things are going. Powell has he's changed his tone a bit. I think you would say he's put a view that 1/3 of his views are about potential policy changes and the strength of the U.S. economy, and about 2/3 of his concern would be about the uncertainty that's coming from the potential policies that we're seeing. I think one of the things that's not being talked about enough is the fact that China's had a lot of time to prepare. They were taken back by Trump's radical approach to governing the first time around. They didn't really have a playbook for him. I believe they have a much better playbook now. So I think they're going to be a much more challenging adversary this time. I think others are really looking at ways to not be in the target of the U.S. for trade tariffs. And I think that's going to make some of the negotiations a lot easier. I think there will be a couple that'll be very difficult, particularly around China and Mexico would be a couple. I think Canada will be a little bit less so. But I think if we overplay the hand in the U.S., you will push countries back to China. You are starting to see it with the South American nations creating better deals to go back that way. But I think we're in a period with low growth, high debt, will create bigger divergences and create a bigger challenge for people to try and play games around the system. You might have to take what you're going to get from your trading partners and can't put the show on that people would like to really go to war if you're not coming from a strong position like the US and China are. I think the bond markets are reflecting concerns about debt and deficits that need to be understood. And I think one of the things that's going to be really interesting to say is we've had these what would be highly unusual, if not completely unorthodox, cabinet positions, raising some of the worst fears that the Heritage 2025 project is being put in place. The question is, does the bond market and do the equity markets, which Trump tends to react to, act as some of a mitigant on how far the Trump agenda can go? He does react very much to equity markets and bond markets, so something to keep an eye on there. The concerns they're showing and the rates moving up are not rates moving the direction that Trump would like to see. He wants lower rates and a weaker dollar, and we're getting the opposite right now. And I think that's because the US is in a strong economic position and our safe haven status and our yield differentials will continue to attract capital. But I think as people try and ease their trade imbalances to avoid tariffs, you'll see more capital flowing to the US, and that continuing will strengthen the currency and make it more difficult for Powell to cut rates without triggering higher inflation. So as we're going through this transition, the US looks like the best place to invest. I think there are pockets of opportunities elsewhere, but we have to figure out right now which administration we will have with the new cabinet positions. And does Congress maintain some level of discipline towards the people they're approving for cabinet positions, or does Trump run them over and do recess appointments? I think that'll send a message to the rest of the world and have a big impact on what policies can be put in place. So a lot of uncertainty still, too soon to tell. I think Powell and the Fed are starting to worry that they're going to have to be much slower to ease and have much more challenges with potential reemergence of inflationary pressures. So I think that's going to be a little bit of a setback, Mark, for how positive people are. But if we get it right, get deregulation, get our energy prices down, and don't go too far in tariffs, I think you'll start to see some of the more positive things. I would be suspect of them getting to 15% on corporate taxes because I don't think they have the offsets from cutting expenses to do that. So I would expect the better outcome, more probable outcome will be an extension of the existing 2017, not much lower, a few give outs to appease some of the working class voters, and then it's going to be business as usual. So stop there, Mark, and open up for other views and discussion.
Thanks, Stephen. As usual. Thoughts, questions? The pregnant pause.
I've got a question, Stephen.
Yep.
Trump's style is sort of when he goes after stuff, he hasn't been afraid to do radical change. If they really took a knife to government spending and efficiency, wouldn't that be pretty contractionary? There's a lot of money that gets spread around a lot of places there. And, one of the things I guess I was reading about was this business of, a lot of defense contracts, for instance, get awarded without a bidding process. It's just done a relationship. I think we all know that there's a lot of fluff in government spending. Nobody ever really takes a real crack at it. If they really took a crack at it here, the time to do it's right now in the first 2 years, so that they have a couple of years to adjust afterwards and have a chance to get reelected in 4 years. I just wonder if some of that might creep into the market here at some point. That could be a reason, why bonds sort of find a level at 4.5% instead of at 5% this time.
I think there are places you can try and cut. I just think that I think that there aren't that many places. When you get into like the civilian employment, most of them are contractors to the defense industry. So I think you can press some people down and, treat it the way you want a corporation. Just go back to the contractors and say you need certain percent cuts from them and see what you can get. But I think the whole idea that they can go in and completely revamp the government setup is going to be a bigger challenge than they think. So I do think the market is fearful that they get it wrong and that they go too far. But I think he's got a big agenda. I think it's going to be hard to do all the things he's trying to do. So what can he get done and what's going to be most meaningful? I think extending the tax cuts for one is going to be big for him. And I think the border is big for him. I think this idea of getting better efficiencies in government is interesting, but I don't know how much they'll get done. So I think they're going to try and do it near term, but I think the other two are bigger agendas for him. So it's a question of priorities.
Samir, then Michael.
Sure. So I had a question. So thanks, Stephen, for the breakout of the spend. So you mentioned the total fiscal spending is 6.8 trillion. Now, of that, I assume that the military budget is gonna not shrink, right? It's gonna keep growing because now we have all this instability in the Middle East, and we don't see that going away. Trump, I think, has sort of mentioned what he'd like to do with that going forward. Given that, right, the military budget each year is close to $1 trillion. They just failed their 7th audit. Not helpful. So it's a fairly big chunk out of the fiscal spend, right? So when there's so trying to cut government spending is great, but if you have this big nut, which is nearly $1 trillion each year, which pretty much doesn't go down, because you can't audit it. You can't actually get much efficiency out of that. We've demonstrated it because literally we can't even measure it. We just don't know. It's this big giant black hole. So that means that the savings pretty much has to come out of everybody else, which as I think Duncan mentioned, there's going to be pretty contractionary. Thoughts on military budget versus everything else?
I think the military budget is going to go up. I think the problem is if you don't attack entitlements in some way, you can't fix the problem. It's 40% of the budget. We say you can't touch it. And at some point we have to adjust for when the Social Security system was put in place, the life expectancy was much lower. We haven't adjusted retirement ages up and all that. So I think they're going to have to focus on some of the areas that are going to be unpopular, the third rail stuff, to really get it done. I don't think they're going to do it on defense, and interest costs are only rising. So I don't see how they really can make the changes that they think they're going to make. So it's, it's hard. It's going to be tougher for them to get there. So I think it'll be contractionary, but less contractionary than everyone thinks.
Stephen,
Michael,
I find the things you didn't touch on is interesting or more interesting than the things you did touch on. So, for example, an early indication will be whether the Senate leadership acquiesces to recess appointments, giving Trump a freer hand.
Yeah.
His reinforcing statements regarding deporting people, and that very quickly he intends on declaring a military emergency. The impact of just grabbing a bunch of people who are illegal will impact the economy. They work in jobs that'll impact companies, and will the countries that these people came from accept them back as deportees? Will we see internment camps? And I was actually speaking with somebody who is Team Trump, but not for, gives inputs, and I raised these issues. I said, this is all going to create chaos. And he said, that's what we're looking for because it enables us to do what we want. So personally, I'm not as optimistic as you are.
I'm not
I
so sure, Stephen. You describe yourself as optimistic, Stephen?
Yeah, I'm not optimistic that they're going to get 7 million people out. I can tell you that. I think Michael, you're bringing up some good points. I think it's how Congress acts. Do they do their jobs or do they go along with whatever Trump says? I think is one of the most important issues facing the nation that we've faced in a long time. I think how we how Congress does their job the way they're supposed to or follows along what Trump wants is going to be absolutely critical. So I think the appointments he put through were in part because he knew he couldn't get them all through, but wants to. I think he's playing his negotiation games, knowing that a couple won't get through, but then he can force put the blame on Congress for not doing it and then make them the problem. But if you listen to Holman, he was saying that job one is closing the border, job two is taking the criminals out. I think that is where their focus is going to be initially. And then I think economically, if they did deport all those other people, I think it would create an economic problem that Trump would react to. So I think there's a mix of the ideology versus the practical element of what Trump's trying to do versus what he's threatening to do. So I think there's a mix that we have to watch.
Well,
But
Yeah,
I think if your concern's the right one, Michael, and I fear that, I'm counting on our system to work.
so just the declaration of a military emergency, what do you think the impact on the markets will be?
Negative, but it's interesting when he was going through all his choices, when he got to the Secretary of Treasury, he's actually looking at somebody likely more market oriented, which says that the market matters to Trump. So I think he'll react to negative market moves in his policy.
But that's why,
Questions,
Stephen,
comments?
that I think is just impractical. This whole deportation. First of all, the cost and the logistics behind it is just impractical. I think he'll try to get an easy win, deport a couple of criminals, deport a what. But the impact, whether it be practical, logistics, budgetary impact on the market, etc., those that labor force goes, wages rise, impacts everyone else, consumers. I think it's a red herring. It's kind of like building the wall in his first administration. It's just not going to happen.
I'm with you on that, Roger. I don't think that mass deportation will happen. I think the one question, Michael, you raised is an interesting one. If he asks the military to do that, will they? To deport people on the ground is a real question, whether they would actually do that or not.
So what do you do with military commanders that refuse to execute orders? You replace them with ones who will.
Mitzi, you want to say something?
No, I'm just not sure I heard the last sentence.
Oh,
I think Michael, yeah. Go
I
ahead, Michael.
said, what do you do with military commanders who refuse to follow orders? And the answer is you replace them.
Okay, now I heard it.
But even I don't think it'll just being a bit optimistic. I don't even think you'll get there, because then Trump will be digging his own grave if you do that and you force the military. He finally gets someone who's compliant. They do everything he says. The practical impact on the economy, the stock market, and everything will come back to bite him. He will be advised that will happen, and then he'll just back off. He'll find somebody to blame, no doubt, but he's got the campaigning and governing are just two different things. And I think even though I'm genuinely concerned about some of his policies, a lot of what he campaigned on, I think, is very impractical to implement. I mean, Stephen just went through the budget. Where's Elon going to get $2 trillion from? When you actually are in the hot seat and you got to make these decisions and try to figure out how to save $2 trillion, you can't. So I don't think a lot of this stuff is actually going to go in his favor. You find somebody to blame for it, and he'll get a couple easy wins on the edges. But I think the institution, the bureaucracy is big enough to withstand even Trump.
Well, one
Anyone
of the
else?
things,
Good, Michael. Michael Hammer, go ahead if you want.
oh, I was just going to respond to Roger and say, what is one of the things that Trump's said over and over again? If somebody hits him or lashes out at him, lash back twice as hard. I mean,
By the way, who's you're in Ohio? Who's going to take over the Vance's seat?
that's a good question. DeWine has an interesting choice because he can't run for governor again. So does he appoint a friend to that seat where there's only, not a full term? Or does he appoint a quote unquote adversarial person within the Republican Party to take them out of running for governor? And there's not a lot of clarity as to which direction he's going to go at this point.
You mean adversarial to Houston?
Whether it's Houston, whether it's Houston or somebody else, what does Houston want? Does he want to become governor, or does he want to go to Washington?
All right. We'll learn soon enough as I head back to Ohio soon. Any other comments or questions? Maria? You have to unmute though.
There. So good to see all of you. I'm not an American citizen. I'm Swedish. And however, I've been here in America now for 2 months, and it's been very interesting to see the election. An important learning, I think, for the Democrats is to look at what was missed, and to really address the people who are poor, the people who are struggling and in survival. It's the revolving doors that has been in the Trump administration the last time will probably continue. So and you cannot do much when you have that revolving door and people stepping on board and believing like, I can take him, or this will be good, and then they give up or they get fired and next comes in. So it's
I always like we had a briefing the other day, and these two Brits telling us what's happening in America. Now we have a Swede telling us. But you see, but you're not stuck in the weeds. You see things a little somewhat more clearly.
It's just a perspective. It's
sure.
But it's my understanding, what I've read and what I've heard is to really address the people who are struggling and the people who are poor, and to have the clear target group. Yeah.
Although one of the things I've been observing, Stephen, from our briefings is that, I mean, Trump is his own force, but that the Dems they lost Hispanics, they lost many Black voters, they lost what was important to them, and I think there's a lot of lessons to be learned. I'm sure 2 years from now it'll be a different midterm, but
I think one of the
and these
lessons,
guys,
Mark, is that people think they have a mandate when we have a divided country still. And people's views can change pretty quickly based on their economic situation. And I would actually say the Republicans should be careful not to repeat the mistakes that the Democrats just did and take a victory and turn it into defeat coming soon. So they have to be careful about overplaying their hand, which is where it's going to be very interesting to see how the Senate and the House Republicans behave going forward.
for sure. Any other voices on this? What's happening around the world?
Thank you.
Well, yes,
Thank you, Marie.
Mark, I've got a question for Stephen about the risk of inflation with all these tariffs, deportations. Will they happen? Will they not happen? I think it's questionable. I personally have concern, having lived through Putin and through Maduro through some period of time. But I think the U.S. institutions are resilient, but I don't know if they're resilient enough to go through a second Trump. But my question is inflation.
And Stephen, just a place marker, because I don't want to, with Mitzi's being here, I want to also get your view on the Russia-Ukraine war, because I'm sure there's some perspectives there. So but hit inflation first, and then we'll come back to you, Mitzi.
Okay,
Actually,
so
on inflation, I think the market is fearing inflation. That's what the bond market's telling you. I think one of the interesting challenges on inflation is how much of an offset is lower energy prices and deregulation on the system, which can be big offsets for companies that will allow them to not have to pass on costs through. And the other element that's hard to determine what the outcome of inflation is going to be is whether the tariffs are actually implemented or gradually or fully, how fast they go in, what products they go in on, and also how countries are responding, because we are already hearing that countries are trying to shift their trade balances so that they avoid the tariffs. So I think the fear of inflation right now is not a problem. The fear of inflation would come depending on tariffs and appointments and other things. I think it's too soon to know if we're going to see it, but the market is fearing it. That's why you're seeing, I think, part of the backup in rates.
Thank you, Stephen.
So the other, and this goes to you, Adam. And I think of you. Maybe you don't even know Mitzi, but Adam and I, Mitzi, were in Russia for many years, and we know our eyes are wide open on this. So I'm just curious what insights you have, and you'll somewhat speak to it on December 3rd at our conference.
I would love to make some comments on this. I've been 4 times, and I'm going a 5th time early next year. The first 3 times that I went, I sensed optimism, backbone. The last time I went, which was end of September, I felt that the mood had strikingly changed. There was a meme that I heard with vast varieties of people that I talked with, and this is the meme: we can get territory back, but we can never get lives back. And I heard person after person say, let's just stop the killing. And that's not everybody. I mean, some people said, you give up territory, that means Uncle Pavel's life was for nothing. So yeah, the feelings are intense, but I can report that there are a lot of people who just want it over. And then I talk with people in Ukraine almost every day, and I think the feeling that I heard in September is even intensified now, because the suffering, I mean, according to the WHO, at least half the population of Ukraine right now have mental health issues like panic attacks, depression, uncontrollable anger. Like a guy I talked with yesterday told me, and I'll shut up after this, but he told me when he's in grocery shopping and he sees a fight starting to brew, he'll leave the grocery store because he said people are so on edge. He can't know that one of those guys doesn't have a grenade and will just throw it. So I think we at this distance don't realize fully the amount of stress that's going on there.
Mark, I would just add that the economy of Russia, which they managed quite well for the first year or two of the war, is actually cratering right now in a way that, to Mitzi's point, is where the pain is starting to be felt. They were doing some subsidy schemes on mortgages and things like that were helpful, but they can't keep doing it. Corporate bankruptcies are up 20%. Borrowing costs are becoming crippling for both firms and consumers. The IMF is talking about economic growth of 1.3% next year. Even the state-run bank VEB is looking at GDP of 2% next year. So you have lower investment, lost manpower. It's all starting to take its toll on the system, as well as just the emotional strain of being at war all the time is a challenge. So I think, Mitzi, you're right. The pressures are dialing up on both sides to get to an end to the war. The question is, what's an end look like that everyone can accept? And for Putin, it's really tough, as you guys know, because if he can't claim a win, he's got a tough next 6 months after the war.
Let me share with you.
Stephen, I think he will.
What?
Allow me
Go ahead.
Who's
Go
going
ahead,
to?
go ahead, Mitzi. You go, Mitzi.
Is it
Mitzi,
me?
go ahead.
All right,
Please,
I wanted
yeah.
to share something that I've heard in Ukraine. Doesn't mean it's true, but I'll tell you, I can certify that there's some people thinking this. They are expecting that Trump will, some people think the following is going to happen, that Russia's lifeline economically is fossil fuels. What if Trump tells him, hey, we're going to, I don't know, let the strategic oil reserve loose or drill 6,000 more wells, and we are going to crash the value of the of oil to $50 a barrel, and you can't survive with it less than 65. Take this deal, or you're going to economically starve to death. That's what some of them think that Trump has up his sleeve.
More difficult to do without the Saudis being on board.
Robin, you want to
by the way, I'm not into defending that. I'm just telling you that.
No, I appreciate that. That's what this whole thing's about. Just adding perspectives, and we'll figure out the truth in the middle.
So I had a chance to hear Gary Kasparov speak at the University Club in New York recently, and he got up and the first thing he said three things that were very interesting. One was that Ukraine and the West must win this war, and I think found a lot of resonance in the room for that. He said that he did not think there was any world in which Putin would be able to use nuclear weapons for two reasons. One is many of them don't work because they haven't been kept up. And the second is that a lot of the generals who would have to actually give the order and push the button would not be able to do that because their families and kids live in England. They live in the United States. They're at school at Harvard. They're at school at Oxford. And so there's no incentive for the generals to go along with anything like that. And the third thing that he said, which I thought was really interesting, was just that, he felt that this was could be the end to a long culture of aggression on the part of Russia if it was handled correctly. And that kind of resonated with people in the room as well, because our colleagues and partners, in the Western Alliance have really been terrified. And I've been in Norway in the last 6 months. I've been in Canada. I've been talked to so many people, and they all say the thing that we're very concerned about the fact that we're not sure we can withstand a Russian aggression across all of its neighbors. So it's just another perspective for you.
Well, thank you. Well, speaking of those neighbors, let's have the Polish perspective with Radek.
Yeah, hi. So I just wanted to actually continue on this nuclear risks that what we can see that the conflict has escalated on the border between Ukraine and Russia, and the Russian have shared that they have changed their nuclear policies. Yeah? So this is something like more not a real threat, but like warning sign. And but on the other hand, I wanted to share that what we can see here in Poland or in this part of Europe is more coordination between Baltic states and Baltic nations within each other, and some changes in politics between these nations and Germany after German chancellor called Putin via phone. So it seems that Germany is losing political ground here in Europe quite fastly. And just to sum up, what you can see that after elections in US and Trump's winning, European politicians, they really don't know what to do. They're just looking for some solutions and answers right now. But it looks like the integration within Europe is inevitable due to the fact what has happened in the US. Thanks all.
Sorry, Radek, what is inevitable?
The integration between European countries, like the more cooperation and increasing in military spendings and trying to figure out how to do it together here, not always counting on a big brother US helping us out here.
Right.
And Mark, the key for that is really to create an IRA equivalent for Europe, or a national defense authorization equivalent, where they put the money into a pool, break their fiscal discipline that they have right now, and change the rules to allow them to be more deficit spenders to finance what they need to do, not only for defense spending, but also for the economic industrial base, get them reoriented, as well as to deal with the other challenges that they have. They have to go into deficit spending, and that's not been a mindset of Europe. So that would be a shift that would allow them to get to a better spot. And that starts with Germany, and their election seems to be the one that could drive that forward if Merz gets in as opposed to Scholz staying in. So it'll be interesting to see how Germany plays that in their election.
Yeah. So, Jonathan?
Yeah, fascinating discussion. Thanks, everybody. Stephen,
By the way, Jonathan, we do this every Tuesday, and it's your first one.
I'll be back and to use a famous line. Stephen, I was wondering if you might be able to comment a little bit. The media is leaking that Howard Lutnick is going to be going over to Commerce. That kind of leaves Scott Bessonette as the lead candidate for Treasury. I was wondering if you might provide some insight into what you think the markets would be doing if Scott got the nod.
I'm not sure if Scott gets it. I do think Kevin Marsh is definitely in the running for it. And I do think Trump wants somebody that that won't just be too disruptive for Wall Street's views of the Treasury, but is supportive of his policies. So the real challenge for them is we're not a great country to have a weak dollar for. As somebody put in the notes, the makeup of our economy is better for a strong dollar than a weak dollar. So I'm not sure that I think the market's going to react to favorably to somebody with a real background that's more mainstream and not as radical as some of the other appointments he has in other roles, which actually is a sign that Trump does care about what the market says. So I think that is a sign. I've met Howard Lutnick at one point. They were looking at acquiring ARS at Cantor, and so I met him. I don't know how he would be as Treasury Secretary, but I think going from Janet Yellen to him would be a shock to the system, put it that way. Not sure if a good one or a bad one, but a shock.
Thank you.
I think Scott was
By the
written
way, Stephen,
the other day, just if I could just add, Mark, I saw Kyle Bass put a response to, I guess it was Musk on Bassett, and said that one of the smartest, most capable guys he's ever met on Wall Street. So for what that's worth, I think you'll see a lot of jockeying, but I think they'll go more traditional. I don't think Howard's the right one for that role.
okay. Michael Hammer, you're back.
So, Stephen, your comment about Europe integrating, doing an IRA type of thing. Yes, but the problem is time.
Yes.
They're not going to move quickly on it. And once you do that kind of cooperation, it still takes time to implement it. So you're talking years, not months.
To be clear, I was suggesting what they need to do. If we were probability weighting it, I'm with you, Michael. I think it's, I think they have to realize the need. I do think Trump is an accelerant for that. How fast they can move TBD, since there are so many elections or politicians that are in kind of fragile states. What we have learned from this year is that I think inflation has not lost. I don't think an incumbent's beaten inflation in their re-elections. I think it's taken out almost every incumbent. So that's part of the problem for Europe too, is they're dealing with low growth, business leaving, and inflation, and a war at their border. Which problem are they solving first? So I think you're right, Michael. It will be hard to get that done as fast as it needs to be done. Mark, I just, on Mitzi's comment on people getting tired of the war, Gallup has a study out today that was now more than half of Ukrainians want the war ending as soon as possible. And that survey was done in the last couple of weeks, and they looked at in 22, when they asked that question, what percent believe Ukraine should seek to negotiate an ending to the war as soon as possible? It was around 22%. Now it's at 52%. So to Mitzi's point, the war and the strain that it's put on the nation and the people and the populations and the families is really starting to wear down, and it's starting to wear the will down.
So Adam, to that point, Adam, I listen to a lot of these blogs and podcasts, the same ones you probably do, Adam Blanco and maybe Mitzi. The narrative I'm hearing is that there's going to be this kind of a buffer zone, that Crimea stays with Russia, that you could have NATO country troops on ground. Goes back and forth. They can be fully equipped to protect itself, but they have to give up ground. And then the question is, what is that? Is that buying Russia time to rearm and reposition? But yet again, they would have full defense coverage, but also gives Ukraine a chance to live and breathe. So it's, I was not fully appreciating. I was thinking more of the defensive mentality, like you just took our land, you took our home, and we're not giving up. But it sounds as if I'm definitely not on the ground. Then you have a weak European. There's Germany is leaderless, and Yeah, it's a and then Trump is who's that narrative of Trump, what Trump could do to Putin. I don't see him talking to Putin like that. That what you were talking about, Robin. That I think that's Kasparov thinking. I just can't see Trump having that dialogue. That's what you could do, but I don't see that. So, anyways, it's just funny food for thought.
Well, Stephen, can I ask the poll you mentioned? I mean, I see war fatigue setting in on both sides, but did it talk a little bit about, well, 50% want a resolution, but at what price, i.e., giving up X amount of land? Or the
actually, they asked, would you agree to a negotiated peace? If you want a negotiated peace, are you open to territorial concessions? 52% agreed, 38% disagreed, and 10% didn't know.
Wow, higher than I thought.
Yeah, me too.
It is higher than I thought too. Yeah.
I just got this in my mailbox this morning, so timely. And then they asked fewer Ukrainians see victory as regaining all lost territory. In 22, 92%. So that was a victory. Now it's down to 81. So the territory issue is becoming less of an issue. And I think as we get into the winter and the power supply system and the grid system is getting degraded pretty rapidly, I think you'll see more people struggling, and that will lead to a bigger push. Go ahead, Mark.
I heard of a tacit truce between Russia and Ukraine. They would not go after energy infrastructure, but then I saw drones going after energy infrastructure like the next day. But
I mean, it makes sense if you're Russia and you want to really bring them to the knees. I think that's part of what the response of the Ukrainians having Biden letting them start to send.
Let me ask you this: we haven't talked about the Middle East, and we haven't talked about Hezbollah, Israel, and Gaza for a while. The other war front. What are we hearing on that front? And Iran. Anyone with insights? And then we haven't talked a lot about China, a little bit, and we will. We're trying to schedule and it could be one of our 8 a.m.s. The question is which 8 a.m. which week, but we have some really interesting. Maybe Steven, you want to tee up what the kind of conversation we're going to talk about China?
I didn't get through Francis' whole thing, Mark, but it's really what China's reaction is to the U.S. and how they're seeing the board being laid out for future moves in the South China Sea, but also what China's doing with alliances around the world is really quite interesting. So I think it's really a question of how does China play the U.S. and how prepared are they, and how does the rest of the world react to Trump 2.0? So I think that's part of what we're trying to sort through. And I think Francis Bolsino was on a couple of weeks ago and had some really interesting insights out of China from that, which, Mark, as we said, we were quite surprised with how open he is about it being there. I also think, Mark, we might want to get control risk back, because they think one of their folks thinks that we're at the tip of the iceberg with China sending some salvos back. They imposed sanctions on a U.S. drone maker, and that drone maker created their company and their drone around a battery that you can only source from China. So they have effectively cut out one drone maker's abilities to use their drones after they run out of their current inventory. But Beijing has come up with a sanctions list and an unreliables list that they're ready to go after companies if they think the U.S. goes too far, and including companies like PVH, which owns Calvin Klein and Tommy Hilfiger, which wouldn't be what you would think they'd be going after, but I think they could cut them out of the Chinese market for clothing, in part because I think they would say that they're not sourcing from one of the regions because of the Uyghurs kind of thing. So I think China has a toolbox that a lot of people, there's two camps. One is, can China screw the US the way we're trying to screw them, or is it just one way? And I think we might be surprised what can come back the other way.
Yep.
Something to keep in mind for China.
Mark, this is Chaz.
Hi, Chaz.
If I could, you had mentioned the Middle East, and we've talked a lot about fracking today, and clearly fracking is at the heart of potential leverage with Russia. Fracking is at the heart of the inflation policy story for Trump 2.0. But we haven't talked about the Middle East and Saudi Arabia and how the Middle East will react to any major change in our shift with respect to fracking. Because if we're going to drive oil costs down to $50, which I think is pie in the sky, it's a global market. The market's going to react, and so is this notion of fracking being the kind of savior and leverage point for the U.S., either internationally or domestically. What do we expect Saudi Arabia to do? Saudi Arabia is not going to live with $50 oil. I don't see it. And I'd love to hear what other folks think about this.
Well, I put on the screen our next major event in Saudi Arabia. You can come join and hear firsthand. We'll explain some of the players there, but this is a very different program. We're not going in hat in hand trying to ask the Saudis for money. We're going to go in and sort of talk about sort of with best practices. In fact, Mitzi, I was trying to get you to come, but I think there was a conflict on the date. And we're working with the Saudi Ministry of economy, culture, now sports, maybe investments, and we might move this back to April because getting all those ministries involved. So maybe the stars will line up and you can join this group of women, which I think are very interesting. But so we'll hear from the horse's mouth, I guess, in a way, Chaz, 361 style.
Steve, what do you anticipate?
I don't think we'll get to $50 because the U.S. is increasing their production. I don't think that's going to get it there. I think a lot of the oil companies right now are more focused on return of capital and profitability than they are about increasing production. I think natural gas is going to continue to do well, but I think that the U.S. can't push around the oil market as much as they can, as much as they'd like. I think the Saudis are still the driver. The U.S. is also the driver, but the Saudis have OPEC. So I think getting prices down that low is going to be difficult. But I think and the Saudis need higher prices to do their transition. They know that there's a problem there. But Michael Hammer is in the oil business, and gas business, so he might have a different.
And you are right.
Here he goes. Michael, what do you think?
So, and again, my focus is on the Utica because that's where my interests are. Other areas impact those interests. I agree with you, Stephen. There's more discipline. If you go back, say 10 years ago, it was expand fast, borrow lots of money, drill, acquire, and people lost their butts. The O&P companies lost their butts. And so there's a lot more discipline in the markets these days. The other thing is, it's not just the drilling. There's a whole bunch of other infrastructure, whether it's oil or natural gas, that has to be in place. for production to really happen. So it just, even if there was a desire, it won't happen quickly. And the other thing is that the government really can only impact drilling on government lands. The private sector on private lands does their own thing for the most part. Drilling permits are from the states, not from the federal government. So I really don't see significant increases in production in the near term or even the medium term. And it's more global happenings that will impact the price of oil. Natural gas in the US, I think, will increasingly be impacted by global conditions. And that's because if you go back, say, 10 years ago, only 10% of US natural gas was being exported. Now we're seeing more like 25% and more permits on the way for export terminals. So natural gas in the US is increasingly impacted by global markets.
Yeah, and I think, Michael, the push for our drilling is on natural gas, and it's to offset the help Europe with their loss of energy supplies from Russia. So I think it's not necessarily going to increase demand considerably in the market to drive costs down. I think it's going to be a shift of demand.
Well, actually, that raises an interesting point, which is there are, I don't want to say efforts, I'm not sure what the right word is, but hydrogen production from natural gas has been one of the focuses of the current administration. So there's blue hydrogen, green hydrogen, and it's not clear what the policies of the incoming administration will be with regard to that. The Biden administration put in place 7 regional hubs here in the eastern Ohio, northern tip of West Virginia, western Pennsylvania. It's called Arch 2. And actually the critical driver of that